6 months ago, all finance YouTubers told us to go and buy Jio Finance shares. So, like sheep with no brain cells, I went to my Demat account and bought a big position in this company. Then I started looking into the stock. No business model, no revenue, nothing. Then why have I put so much money in this company? By the time I came to this conclusion, the price had already shot up by 50%. So let's get an overview of this company today, where they plan to make money, how Mukesh Ambani will leverage his connections, money and power to set up this financial giant in India. And finally, find out if this could be for us what Titan was for Rakesh Jhunjhunwala, a multibagger. Let's break this topic down into 4 easy points. Number 1, why is the stock rallying? Number 2, changes to the business model that are impacting this rally. Number 3, why did Jio choose the finance sector for their next big move? And finally, number 4, the most interesting, is valuation. How do we value this company? Wait till the end to know what we actually think of this company and if it's worth keeping in our portfolio. Let's start. Why is Jio Finance rallying? Can you imagine a company going public with no business model, having an oversubscribed IPO and trading at a premium? This is the power of Reliance and the Jio name. There are 2 key reasons behind this sudden rally. Number 1, there is ample speculation and rumors in the market about the stock. And number 2, Jio is building a solid foundational layer for this company to stand on, which is driving up the price. So what are these rumors we are talking about? There have been news articles floating around about Jio Finance. Stuff like Jio will buy Paytm or Jio Finance to make sound boxes similar to Paytm. This fake news about the company drove up the price without any merit. The stock also rose 5% in a day when they announced their partnership with BlackRock, the world's largest asset manager. I will talk about BlackRock in a minute. So much speculation and news is the reason for the volatility of this stock. Let's talk about the foundational layer Jio Finance is building. If Jio Finance doesn't have any running business operations now, the question arises, what business will they get into? Will it be loans, credit cards, microfinance, or something else? Well, after months of speculation, Jio announced their partnership with BlackRock. Yes, the BlackRock. If you don't know who they are, buckle in, because this will be interesting. BlackRock is one of the largest, if not the largest finance company in the entire world. Let me give you some context. Their assets under management, which is basically how much money they control and manage, is $10 trillion. For context, the GDP of India is $3 trillion. India's mutual fund market size is $500 billion. As a single entity, BlackRock manages 20 times the money that all Indians have invested in their mutual funds combined. And this is the giant that Jio has partnered up with, and one of the reasons for the stock rallying. So far, if you guys are enjoying this video, please do subscribe. 99% of our viewers are not subscribed. We would greatly appreciate it. Now, let's change gears and see what changes is Jio Finance making to their business model, which is making their stock rally. In their latest quarterly report, we see their plan to get into multiple businesses like leasing, lending, banking, payments, and more. But we believe the most interesting and the biggest part of their business will be the 3 joint ventures they are doing with BlackRock. First is the AMC business, which they had previously announced. AMC stands for Asset Management Company. This basically means they are making a mutual fund in India that we as retail investors can put our money into. Second is a new addition to the lineup. It's a brokerage business they are starting with BlackRock. This basically means they will create a platform for the public to buy and sell shares, similar to Zerodha, Angel One, Grow, etc. If you remember from a previous video where we had spoken about Zerodha's finances, last year Zerodha made approximately 2,000 crores in profits. So this is a huge sector for Jio to make its entry. Lastly comes the wealth management segment for HNIs, high net worth individual. According to a recent report, India's HNIs hold $1 to $1.2 trillion in assets, which is almost half of India's GDP. Jio has specifically chosen the finance sector to create its next giant. Why is that? Well, the answer is simple. This business requires minimal assets on the company's books, like vehicles, land, machinery, factories, etc. The hardest part of the business is building enough trust for people to give you their hard-earned money. Jio already has that. They've made it through their years in the business. And business in the finance sector usually equates to great profitability. Loans lead to direct interest payments, mutual funds lead to direct asset management fees, and insurance leads to direct premium payments. This is a high growth, money-making industry which Jio has entered. As India grows, billions of dollars of foreign investment will be entering the country. This is setting up Jio Finance in the perfect place to profit from this influx of capital entering India. Now, Let's move to the valuation. How do we value a company like Jio Finance's? Without any business model, Jio Finance is already one of the largest finance companies of India with a market cap of 2 lakh crore rupees. But this is partly true. You see, Jio Finance holds about 6% stake in Reliance Industries, which is worth, at the time of the recording, approximately 1.1 lakh crores. So out of the 2 lakh crore valuation of Jio Finance, 1.1 lakh crores comes from their Reliance Industries holdings. This is also reflected in their income, which is largely made up of dividends received from Reliance Industries shares. The company's PE, which is price to equity ratio, is approximately 150 right now. But for the stage this company is at, PE is not the right metric to gauge the company's valuation. Jio Finance has no operational income. The income is only from its assets held and shares of Reliance. So looking at the book value of the company will also not help. It is also tough to compare this to other businesses to get a benchmark for PE or PB ratios, as Jio Finance is 6 to 7 businesses combined into one. So do we compare it to other brokerages, other AMCs, other banks, other leasing companies, or who exactly? This is a speculation market and we are professional speculators. This company is either a multi-bagger success story happening in front of our eyes or a failure. This is not financial advice, but a small portion of my portfolio is allocated to these high alpha plays that may beat the Nifty average by a large margin. Leave a like if you enjoyed this video and we will see you in the next one.